All right, a very good morning. Today is the 8th of August. This is our first community call. We are live streaming on Discord and also recording this session for sharing on our YouTube and Rumble channels. So thank you for joining me. We have first community calls every Friday, midnight UTC. This is, again, live stream on Discord, so join us there. We do post a schedule on our Discord and also on our Verse Telegram group, guild.xyz/verse. So join us there to check out the schedule and have a follow-up discussion on our calls. All right, today we are returning to technical indicators, and this session will be giving an introduction to some intermediate technical indicators that you may have heard about. All right, let's dive into it. All right, so this session is for those who are new to trading. Regardless whether you're trading in DeFi or TradFi, if you want to learn about technical indicators, this session is for you. If you want to level up your trading skills, do join us for this session. And by the end of the session, you'll be able to understand some intermediate technical indicators, such as the MACD, the RSI, and the stochastic oscillator, and how they are calculated. And we'll also be going through some of their potential meanings. All right, as usual, this session is for informational and educational purposes only. It is not financial advice. So do your own research and know your risk tolerance before you trade. All right, with the disclaimers out of the way, let's get into it. All right, so a brief recap. So technical indicators are clues on the price charts suggesting future price movements. All right, so you may have seen a lot of day traders or if you're trading at home, you have these fancy multiple screen setup monitoring tons of charts. You may not be familiar with what those charts are, and this session is to educate folks who are curious about these charts and what these traders are looking at and how to interpret them. Right, so a lot of these technical indicators are used by traders to plan entries, exits, and manage risks. It could also be just to understand what the market is doing in general, right? And the great part about technical indicators that is purely based on price and volume data. So you don't need to consider what the news is saying or what folks in the US or other parts of the world are doing with their economy. It's only based on price and volume data. So it simplifies a lot of the decision making. And of course, technical indicators are heavily used in TradFi and crypto trading. So not only BTC, but also stocks, ETFs, and Forex. All right. Indicators do not guarantee outcomes, so they only suggest possibilities. Okay, so they give you a hint to what the market is doing. And we went through several indicators on our previous sessions, so I'll be dropping a link below to those sessions if you're interested to learn more. You can check those out. Previously, we went through some basic indicators such as candlestick patterns and moving averages. And today we'll be talking about some intermediate indicators such as the MACD, RSI, and stochastic oscillator. This is a gentle introduction, so don't be afraid if you have not covered the previous indicators before. We'll go through the intermediate indicators as simply as possible for everyone to understand. All right. So our first intermediate indicator is called the MACD, or also known as the moving average convergence divergence indicator. So we simply call it MACD. What the MACD does is to help spot the trend and what momentum or what the buyers and sellers are doing in the market. So that's called momentum. Like how many buyers are there? What are they doing? Is it are there more buyers than sellers? So that's around momentum, right? So it helps us spot the trend and what buyers and sellers are doing, right? Also known as momentum. All right, and the MACD comprises two moving averages. First of all, it's the MACD line itself. So that's calculated using a 12-day exponential moving average. So taking the 12 days of price, doing exponential moving average on it. Subtract that with the 26-day moving average, exponential moving average, and then you will get the MACD line from it. All right. A signal line can also be generated from the MACD line. So basically, it's just a 9-day exponential moving average of the MACD line. Okay. And the MACD can also be visualized as a histogram, simply taking the MACD line, subtracting the signal line from it. All right. So as you will see over here, this is a chart of Bitcoin and the Aussie dollar. And you will see two lines which represent the MACD line and the signal line. So again, MACD line, signal line, these are two moving averages. And you will also see you will also see the histogram in the MACD chart. So that's represented by the bars here. All right. So visually, the MACD comprises three things: the MACD line itself, the one in blue on this chart, the signal line on yellow, and the histogram. Okay, so that's how you read a MACD chart. And there are some possible interpretations that the MACD will provide us. So first of all is when the two lines cross. Right. So if the MACD line goes above the signal line, so all right, here is a good example. So the blue line, the MACD line going above the signal line, the yellow line, that's a cross, and that is a bullish signal. All right, means that a lot of buyers are coming back into the market. And conversely, when the MACD line goes below the signal line, so we see it here, the blue line going under the yellow line, so that's a bearish signal, right? Bearish cross. All right, so that's a very common way to interpret the two lines on the MACD. But you also can use the histogram to identify what the momentum is. So momentum, again, how many buyers and sellers are there in the market and what are they doing, what is their strength, right? So when the price moves opposite to the histogram, right, the momentum is weakening. It means a lot of buyers, either buyers or sellers, have exited. They're not participating anymore in the market. All right, so you see that here. All right, so you see a lot of price. You see the price going up, but the histogram is reducing. So that's momentum that's weakening. All right, and conversely, when you see the price moving with the histogram, so you can see it here, where the price is going up and the histogram is also increasing, that means that momentum is strengthening. So it could be price going up, momentum going up, or price going down, momentum going down. Right. So that is a signal. So when it moves together, it's a signal that the momentum is increasing. Right. That means, so in this case, it's more sellers in the market. In this case, it's more buyers in the market. All right, and they are buying more aggressively. Okay, so that's how to interpret the MACD. So again, there's two general categories. So a bullish and bearish crossover. So when the two lines cross, and also when the price moves together or opposite to the histogram, that's where momentum is weakening or strengthening. All right, so that's how to read the MACD chart. So usually if you pull out your favorite charting software, it could be TradingView, it could be any other charting software, and you just select MACD, you will get this nice chart over here, and you can practice your looking at the MACD chart according to your preferred crypto or stock. All right. So that's on MACD. Let's move on to the second one. All right. Second one is called RSI, also known as the Relative Strength Index. It's a little bit more complicated to calculate, so I've added some formulas here. If you're mathematically inclined or you like to do that as a thought experiment or a mathematical experiment, just go ahead and Google RSI calculation or RSI formula and you'll get the formulas out. All right. Again, if you are using your charting software, your favorite charting software, RSI should be calculated automatically for you. Just set that in your settings, and this chart will come out. All of that would be calculated for you. Right? So in this case, the RSI is one line, and there are bands within the chart now, right? So this story, this visual tells you the speed and the change of price movements, right? So how fast are buyers buying or sellers selling, and how intense is that activity going on, right? And the bands are automatically set usually for you. So they are thresholds of 70% of the strength index and around 30% of the strength index. So that's 70% is the top band, the 30% is the bottom band. Right? And together, this forms the overbought region. Right? If the signal line crosses over the threshold, so over the 70% threshold, that's the overbought signal. And conversely, if the signal line drops below the 30% band, this is the oversold signal. All right, so that's how you read the RSI visual. And on the RSI, you're always looking for areas where the line is peeking out of the band or under the band. Right? So those are the key areas to pay attention to when you're looking at the RSI. All right, so when you are in the overbought zone, this is usually a very hot zone and the price is very high. This overbought zone, if you're in the overbought zone, it's an indication that the price may drop in the future, right? Conversely, if you're in the oversold zone, price is very low. This could mean that the price may rise at any time in the future, right? You can see this in the chart. So that's one way to interpret the chart. Again, there is a secondary way, which is not too common, but usually when the price makes a lower low and the RSI makes a higher low, that is a bullish signal, right? So here, your price is doing a lower low, but your RSI is increasing, right? So that's a signal that it will bounce back. Right? Conversely, if the price is making a higher high, but your RSI is making a lower high, that is a bearish signal, and it could mean that the price will drop, right? So it measures intensity of the buying or selling, and also how much activity is going on in that region, right? So again, in summary, for the RSI, you're looking at the signal line going above the 70% band and also below the 70% band. All right, so that's how you look at the RSI chart. Okay, so relatively simple. Let's move on to something it sounds quite scary, right? So this one is called the stochastic oscillator. There's a lot of math going behind the scenes on why it is called a stochastic oscillator, but we won't get into that. We will still be applying the techniques that we learned on how to interpret the charts visually. So as long as you remember those techniques, like the bands and the peaks and the bottoms, that will get you through looking at the stochastic oscillator chart. All right, again, so the stochastic oscillator usually compares price over a range of time, all right? And there are two lines for the stochastic oscillator. There's the K line, which is they call it the fast line. There's a D line, which is a 3-period, or usually a 3-period moving average of the K line. And there are many settings available for stochastic oscillators. So you can use commonly 1433, 2133 for volatile markets, or if you're looking at a token or a stock that's more stable, it could be a 533. So those are some settings available for a stochastic oscillator indicator. No need to be too particular about it, as long as you are aware that you can change the settings of the stochastic oscillator. All right, so you see here you can on your favorite charting software, usually you can set these settings on the oscillator or choose different ones. Okay, but the point is, once you've got the stochastic oscillator chart on your preferred trading software, you can start taking a look at where the signal lines peak above the bands. All right, so again, there are bands: 80% band and a 20% band. This is quite standard. And where are the lines crossing above the 80% line? So that is the overbought area. And conversely, if it's going below the 20% band, this is the oversold area. Right? So all you need to do is to look where are the lines peaking above the bands or below the bands, and that is your area of interest. Right? Everything else, not so important. And again, overbought area means that the price may, the price is very hot, very high. It may drop in the future. If you're in the oversold area, under the 20% band, the price is very low. Price may rise in the future. Okay. And if you want one level deeper, you can look at the lines itself. So if you see the lines, the K line going over the D line, that is a bullish signal. So you can see here, as a cross is a bullish signal. If the K line is going below the D line, that is a bearish signal. All right. So if you want to simplify the RSI and the stochastic oscillator, all you need to do is to look at where the peaks are. So is it over the band, over the 80% band, or under the 80%, under the 20% band? Those are your areas of interest. Okay, so I hope that wasn't too scary for you, even though stochastic oscillators, the term does sound scary, but it's really not that bad. All right. So if you do want to dive deeper into it, I encourage you to read Investopedia. There's a wealth of information there on technical indicators and what they mean, and you can also Google some of the keywords that we've highlighted today. Particularly MACD. So you can Google MACD Bitcoin, MACD Ethereum, and then that will give you a chart for that, or RSI or stochastic oscillators. Okay, so that's where to look at more information. All right, so today we've went through a very gentle introduction to the intermediate indicators, MACD, RSI, and the stochastic. Again, not one signal can guarantee outcomes. Usually they are combined with others to have a better accuracy in terms of your entry or exit decisions. So you can combine that with, you can combine the intermediate indicators with your candlesticks, with your moving averages, and of course sentiment from the news and social media, and that would paint a clearer picture about what the market is doing and what to expect. All right, and of course, on the final note, if you're going to trade, always manage your risks. Practice on your demo accounts before trading live. Learn as much as you can. This is not financial advice, it's for educational purposes only, and do your own research. All right, if all of this sounds too challenging and too technical for you, don't worry. Right, stay tuned for this new feature that we're working on called the Markets Toolbox. Check out our previous public consultation on it. If you are interested in a very simple way to access these tools, do join our public consultation and user research that's currently ongoing. I will also drop a link in the chat for you to participate there. All right, why are we doing all of this? We believe Bitcoin and crypto will be used by everyone around the world one day, and we are here to make crypto fun, easy, and rewarding for everyone. All right, thank you for joining me on this session. As usual, we will have first community calls every Friday midnight UTC. Join me there. This will be live stream on Discord and recorded for folks to review on our YouTube and Rumble channel. Also, we will have a verse scratcher scavenger hunt this Sunday midnight UTC. So join us there. We do have verse scratchers that we'll be giving out for that scavenger hunt. All you need to do is answer a few simple questions about the Bitcoin.com and Verse ecosystem, and you have a chance to win Verse scratchers along the way. All right, we are also rewarding positive role models in our public Verse Telegram group. So join us there to spread the positive vibes, help out newcomers, and you'll be rewarded with Verse scratchers every Sunday at the same time. Okay. All right. Thank you so much for joining me on the session, and have a great day. Goodbye.